Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. Whoa, we did it. Actually, no. Mary, you did it. You led, and it matters, and now you are on Time Magazine. You are the person of the year for 2021. Mary Barra, it is amazing what you've done. It's just unprecedented. I don't know how we could be here with... Hold on. Wait. Oh, that's Joe Biden's line. Whew, sorry about that. Actually, Elon Musk is Person Time Magazine of the Year. So congratulations to Elon. Very proud of you. I don't think anybody else would have really been as fitting for this position. In fact, in my opinion, Elon Musk could easily be on this cover year over year for the last few years. It's no difference than the NBA's MVP award, right? It could easily have gone to LeBron James for a span of 10 years in a row, but it didn't. And I get it. There's other things, other situations, other reasons why you have to, or why it's nice to pick other people. But, you know, let's focus right now on Elon. This is very fitting. If you haven't read the article, I highly recommend you check it out. Great article. More or less a glowing piece of Elon. For the most part, there's some things I thought were a little weird they said in it, but I think this is it gives you optimism for where we are in today in 2021. It gives you optimism for the future. It makes you feel, like there's still hope, and amidst all of this chaos that we have, all the political infighting, what different countries, COVID, the pandemic, it's almost a beacon of light when we think about the fact that the wealthiest person in the world, whether you agree with his political views, his twittering, or anything like that, the wealthiest person in the world is a person who, one, is dead set on trying to make sure that we do not lose this light of consciousness that we have in humanity, and trying to make the human race a multiplanetary species. Essentially, it's inevitable that something's going to happen to the Earth again. It's going to get hit by a meteor or something, right? Or we're going to do something to ourselves. It's inevitable. Something's going to happen. And by making sure we're a multiplanetary species, we are mitigating the risk of that inevitability. Right now, we are a single point of failure, a single failure domain. As a software systems engineer, we always try to mitigate single points of failure. And right now, the Earth is a single point of failure, right? If something happens to Earth, we're doomed. And so the wealthiest person in the world is trying to mitigate that. The wealthiest person in the world simultaneously is trying to accelerate the advent of sustainable energy to protect our current planet. And then the wealthiest person in the world also lives in a tiny house. He has sold all of his other possessions. He doesn't own all these different houses. He's not somebody's out there spending money, like Dave Blazarian. He's not out there, just like some celebrity hotshot, even though he is. He's a person who is very, humble in his spending. And he just, it gives you hope that this is what we see as the wealthiest person in the world. And I just think 2021, out of all years, it's very fitting that Elon Musk gets this award. So congratulations to Elon. Very excited for you. Well deserved. Couldn't be happier. With that said, we're going to talk about the catalysts for the remainder of the year. We have about 2 weeks left in December, and we're going to talk about the catalysts for the upside and the catalysts for the downside when it comes to Tesla stock. So again, in this channel, we focus on long-term investing. All right, we like to have a horizon of a 5+ year out. However, with that said, I do think it's also important to understand what's happening from the micro perspective, not always just the macro. And so in today's video, we're going to take a look at the next 2 weeks, the remainder of 2021, and see what risks lie ahead and where you might have a buying opportunity before we get into 2022. So before we get into it, do me a favor, hit the like button, hit the subscribe button, ring that bell. Don't forget, you can buy some merch at our store, links down below in the description. And with that said, let's get into it. The first catalyst is the opening of Giga Berlin and Giga Austin. As we have heard and it's been reported as recently as last week, Tesla still anticipates Giga Berlin and Giga Austin opening up in 2021, so the production to start in December. Now, we only have 2 weeks left in December, so at any moment, it could be tomorrow, it could be the next day, it could be next week, we could find out that Giga Austin, Giga Berlin are live, production has started. Now, this could be a very positive sentiment for the stock price that could send it moving a lot higher very quickly. Now, it's not guaranteed. For all we know, a lot of this might be already baked into the price, but I have a feeling it hasn't been. And I have a feeling that a lot of enthusiasm is going to come. We've had a lot of suppressed feelings about Berlin, Austin. We just haven't had a lot of news about it. I mean, we see what's happening with drones and permits being filed, but we haven't really heard a lot about what's going on with Giga Austin. What we do know is that they are both, as of right now, still estimated to open up and start production in 2021. And we only have about 2 weeks left, 2021. So that is something that's very bullish to keep on your radar. Positive catalyst number 2. Elon Musk might be finished selling all of his 10% of shares that he had committed to via the Twitter poll by the end of 2021. Now, why is this such a big catalyst? Well, one, because Tesla has been consistently, and when I say Tesla, I mean TSLA ticker, has been under pressure ever since Elon has started selling. Now, a lot of these are pre-planned sales, but the whole goal for Elon is to get to 10% sold, I think, before the end of the year. And again, I have no reason to believe that this is actually a goal of his. It's just what I'm estimating and what's been forecast and what other people are predicting. And so if Elon does finish selling all of his 10% by the end of 2021, this is going to have a huge ripple effect. Once he's done, that means a lot of these portfolio managers are going to start buying again. Gary Black gave us some insight into what other portfolio managers are talking about that he's friends with. And what they've told him is that they have no intention to buy any more Tesla shares until Elon has finished selling. So upon the completion of him selling, we could see a flood of new buys coming back into the stock price. So if that does happen at the end of 2021, we could see a very strong push up in January. Positive catalyst number 3, production numbers coming out of Giga Shanghai for Tesla China. Now, we did get the Tesla China numbers for November. However, we have not seen the production numbers. And this could be a very big delta between the two. And the reason I say that is because many vehicles may not have been delivered, or Tesla may not have wanted to spend more money in order to expedite delivery because they are trying to get away from this whole way of selling and delivering vehicles. And so what this means is that we could have a onset delay of vehicles being delivered even though they've been produced. So finding out what these production numbers are will tell us two things. One, it'll tell us what November numbers may really have been and what December may look like moving forward. And two, it'll tell us again what the run rate is of Giga Shanghai. Ultimately, for us long-term investors, that's what we really care about, is the run rate of Giga Shanghai. Because if we get Giga Shanghai to be at a run rate of 900,000 to 1 million vehicles per annum, and again, that's run rate. That's not, taking into account any downtime, right? But if that's what we expect the run rate to be, and that's what it is, that could be a very big effect onto the stock price, especially for the long term. Now, for the short term, the reason these numbers matter is because if Tesla Giga Shanghai actually produce a lot more vehicles and they just haven't been shipped yet, or they haven't arrived to customers, mainly because Tesla is less focused on paying extra fees to expedite vehicles, this could mean that Q4 could be massive. Keep in mind, Giga Shanghai is the export hub. So a lot of their vehicles being exported leave Giga Shanghai in the first and second month of the quarter. Now, that last month of the quarter, that's where they focus more so on domestic sales. And the reason for that is because they have less time to get to the customers. So ultimately what this could mean is that towards the end of December, all of these ships, all of these trucks, all these trains that are shipping vehicles, because Tesla did not worry about getting so many out in November, they may hit the actual sales number in December. Now, again, a lot of this is just me posturing and speculating, but this is a very real viability, right? This could be true, especially after we saw what the run rates were on a weekly perspective from October. November looked a little light in comparison to what October looked like. And I find it very hard to believe that Tesla Giga Shanghai slowed down the second month of a quarter. Find it very hard to believe. Something else that could be attributing to this number is the fact that maybe, something like USB-C ports, were delayed ship, and so that slowed everything down. So Tesla You might have a whole bunch of vehicles ready to go out, but they're missing one part. And so that's the only delay. And so, this just could have a big ripple effect. These production numbers are going to tell us a lot. And so when those come out, and they might come out any day now, that could have a tremendous effect on the stock price because, again, it'll give us real insight to the business of Giga Shanghai. Positive catalyst number 4. And this is the last one I have that I think will ultimately happen by the end of 2021. And this one may be a little not so obvious. Now, this is Build Back Better. In my estimation, I do not think Build Back Better is going to get passed before 2021. And if it does not get passed in 2021, I don't think it gets passed at all. Now, why is this such a positive catalyst for Tesla? Well, all these other OEMs need this Build Back Better plan and the EV tax credit to remain viable and profitable and to help them essentially crutch and limp their way into the EV world. As of right now, they all need it desperately. We're talking about Ford, we're talking about GM, we're talking about Stellantis. However, Tesla does not need it. In fact, Elon Musk is on the record saying, get rid of it all. Get rid of the whole bill. We don't need any of it, right? Again, citing inflation, citing the debt, talking about how, we don't need it. We're there. Innovation is essentially prospers more without these handouts. If this happens, that's just going to be a buoy for Tesla. It's going to make their numbers continue to look better. And it's just going to be all around better because it's going to put the competition more at bay. Now, there is another thing that could happen. Let's say Build Back Better does pass. However, Senator Manchin holds true to his word and refuses to sign it if they have the union tax credit in there. Well, this again will just be a positive for Tesla stock. Why? Because at this point, none of the OEMs will get the extra cash, the extra handout from the Build Back Better plan for union auto workers, right? That extra $4,500. And instead, it'll be a level playing field, and all of the auto manufacturers will be able to get the $7,000 to $8,000 per vehicle. Now, what this means is that essentially Tesla will be the only company to really benefit from this because they're the only ones producing in mass volumes, right? Everybody else is producing 20, 30,000 vehicles a year in the US, whereas Tesla is well over 500,000 at this point. So if you do the math, this could be anywhere from a $1 to $2.5 billion revenue generating, essentially free money that's being given to Tesla. So either way, as long as this union tax credit isn't part of the bill, I think it benefits Tesla. So, and even if it does, in reality, nobody else is going to be able to benefit from this union tax credit in a way that's very meaningful other than Tesla, right? Tesla's the only one's going to be able to benefit from these tax credits in my estimation. Now, again, I don't think this bill is going to get passed. I think that Manchin is going to delay it. I think this new CPI report that came out with a inflationary number of 6.8%. I think this is just showing us things aren't transitory at the moment, or at least it doesn't seem that way. A lot of pressure. Essentially, we are pumping too much money and we need to refrain from that. We're spending too much. We need to refrain from that. And Manchin sees that and Manchin really believes in that. But we'll see. Politicians have a way of changing their mind or, getting certain, benefits or ways of massaging their views and their opinions on certain things. So we'll see what happens with Manchin. Either way, I think Tesla benefits. And I do think that is the fourth and final catalyst that is of a positive nature for Tesla by the end of 2021. Now, let's stay balanced. Let's talk about the negative. Let's talk about the negative catalyst that could happen for Tesla in the last 2 weeks of the year. Negative catalyst number 1. And I'll be fair, this one could end up being a positive. The first catalyst that could be negative, in my opinion, is COVID. In other words, the Omicron variant. And the reason I think this could be a negative is if it becomes something that becomes more serious. If it's something that we start seeing hospitalizations and higher rates of death due to this Omicron virus. This could lead to shutdowns again, right? We could lead to more bans of international travel. I mean, it disrupts supply chains. However, the reason I say this might be a positive is because it's been a couple weeks now, and what we're seeing is that the Omicron variant really is a nothing burger, right? It's nothing that's really having any meaningful impact across the world. We see very, very low rates of hospitalization. we do see it being very contagious, but we don't see it really having any crazy impact the way the Delta or the Alpha variant had. Now, this could still, under the umbrella of COVID, become a negative catalyst if another variant comes out and something else crazy happens. But I don't foresee that happening at the moment. It seems like when it comes to COVID, we are kind of starting to steady out, and if anything, we're starting to de-risk a little bit from COVID. So although that is somewhat of a positive because Omicron seems to be less of a issue than we might have thought initially, it is still a risk, and it is something we should be aware of, whether it's Omicron or some other variant. Potential negative catalyst number 2, and this all has to do with the Fed, with Jerome Powell. Interest rates, okay? Now, the Fed has already indicated that they plan to taper sooner and raise rates sooner. Now, what does this ultimately mean? Well, ultimately, it means that we're going to have less quantitative easing. It means we're going to have less buybacks from the Fed, and it means that they're going to raise rates sooner than what we expected. Now, we have already seen the stock market, have its gyrations from this, and watching Powell do essentially a 180 away from transitory to essentially transitory, and this being real inflation. With that said, I think the market has started to bake a lot of this in already. This isn't news, but with that said, if Jerome Powell decides to say, hey, we're going to start rate hikes, as soon as, the first couple months of January or of 2022, this could have another negative effect on Tesla stock. Now, again, this is more short term. Long term, who cares, right? Long term, when we're looking out 5 years, what do we care? It doesn't matter. However, for some of us, we have options. And again, my options do tend to be longer term, right? As I mentioned before, I normally have an 8-month window at minimum for my options. That is something that I want to know about is from the short term. But for you, especially if you're just a long-term investor and you don't care about these little bumps up and down, the reason it's important for you is because you can use that to essentially try and find a window to buy more shares of anything, okay? Not just Tesla, but anything. And again, keep in mind, none of this is investment advice, just me, an engineer, giving you my thoughts, my opinions, and what I'm doing. But these short, windows of where a stock might drop or the market might drop for overreaction, those are the times to buy, right? Especially when I see the market as a whole go down, that's when I really start, foaming at the mouth and ready to feast. Because when the whole market goes down, and I know the underlying companies such as Tesla nothing has changed, that means it's ripe for the pick, and that means things are on discount. In fact, things are on discount today. And I don't know if things are on discount because it's the end of the year, people are selling, or if it has to do with Elon selling, who knows? Or maybe there's something else going on. But I think that, this is a bigger risk in the short term. And long term, I don't think what the Fed does really matters at all. The final risk that we really have going into the end of the year, and this is more so of a 2022 risk than 2021. In the first few days of 2022, we'll get Tesla's final Q4 numbers. Now, if for some reason, somehow, these are way, way below than what analysts expected, Wall Street expected, even Tesla bulls expected, this could have a serious reaction on Tesla stock. Now, I don't see that happening, but it is something you have to plan for, and you have to be aware that these dates are coming up. So once you get done New Year's, expect these numbers to come out because they're going to be real. They're going to be there. Now, this could obviously be a very, very big positive catalyst for Tesla, but at the same time, as fast as it can go up, it can also go down. Remember, going up and to the right, in other words, the stock price going up is very much like taking the stairs, right? It's up and then there's a run. It's up and there's a run. It's up and there's a run. However, for a stock price to go down, it's like jumping out the window. It can tank quickly. It doesn't need to take its time. It will sink fast, like throwing a bowling ball out the window. These are things just to have on your radar, just to be aware of. Now, at the end of the day, I think 2021 has been a fantastic year. I think we're going to end very strong. And in the next episode, I'm going to talk about my 2022 year-end forecast. So not just from a stock price perspective, but from a production perspective, what I think Tesla will sell, whether or not the Cybertruck will be out, right? I'm going to talk about all of that in the next video. So hopefully you enjoyed this. Hopefully I brought to light some interesting, catalysts that we have coming up. And, I hope you thought this was balanced, both on the positive and negative. Now, with that said, do me a favor, hit the like button, hit the subscribe button, ring that bell. Have a good week. I love you all. Peace.